Well, good weekend, all. I'm Epstein with your Metal Market Wrap-Up, and this is your weekend edition where we're going to look at weekly charts for this Friday, the 3rd of May, 2024. Well, a down day today in gold and silver. Copper came back alive. Doesn't seem to want to go down on the daily chart to the 18-day average of closes. We had a big up day in the stock market. We had a down day of size in the energy markets. Bonds and notes got a rally. They didn't hold on to the whole rally by quite a bit. And if you go to look at them, you see why. And what the market's doing is it's questioning today's report. So why don't we take a look at those and get a feel for what they are? And let me give you right here. You had the monthly non-farm payrolls came in 175,000. The low end of everything. For those of you that get my full subscriptions, did I not write about 175,000 figure? And I countered it with a 300,000 figure. So I gave two parameters that the market might go to if it didn't stay in the center expectation. That hit it. When you dig into it, it gets interesting. You did see the unemployment rate go up by a tenth. This is everything the Fed wants to see. My problem with the raw number is this. Why did the government payroll drop 90%? Yeah, you heard me. Wow, that's a big drop. Did it really do that, or is this a number that's going to get revised? April often sees a good revisionment because of tax inflows and so on. We'll see if it happens. There's no way to know. You don't assume you're going to get a revisionment. I bring it up, but you trade the numbers until you get the revisionment. Do we understand that? Then you go over and you look at average hourly earnings. Well, while they're climbing, they're at an exceptionally slow rate of climb, both year over year, month over month, and you might even get away from an average hourly gain soon if you keep dropping month over month. Applaud it. This is what the Fed wants to see. When we come to the ISM service sector, this is another number the Fed wants. The outlier has been the service sector all the way through. You know that. That's what we've been talking about for the better part of a year. So it didn't just happen. Well, suddenly you're in contraction. So the market has turned itself around. I don't know any analyst that was calling for it to contract. It's actual contraction. Slippage is different than contraction. Anything under 50 is contraction. And you're getting this across everything but prices. And that could be a laggard that you have in this as it's catching up with all that went on. And we know the Fed wasn't happy with inflation. And that was the sticky part. And you're still there. But the other parts, the bite is happening. And the Fed's going to say the bite from restrictive interest rates is going their way. So when you get that type of bite, what the market does is the stock market, the first cheer, which is typically wrong, is rates are going to fall. This is great. But they're not telling you the reason they're going to fall is the economy is going to slow down. So just be aware of that. The enemy, one of the enemies of the gold market is a higher dollar. Well, today the dollar wasn't higher. Another enemy of the gold that's there is a high interest rate. Interest rates actually fell. This is an inversion market, bonds and notes. The other enemy of the gold is what's going on with war in the Middle East, and that could go into a pause. So I look at it that this is the pullback. We saw a dramatic move into commodities between January and March. You remember the runaways and the markets up at the upper Bollinger Bands and over them for days on end in the gold market. That only lasts a brief period of time. And the wise guys always write me, look, you're missing this and this, you got to buy it and blah, blah. Okay, I get you. The monthly close, gold is up. Monthly chart is powerful. This is an all-time high close on a monthly basis. Okay, I'm impressed. On the weekly, we've given back a little bit. There's nothing to worry about. This is a correction so far in this market. It could correct all the way down to the 18-week average. I don't think it will, but it could. When you look at the weekly right here, you can see how the market is backed off now for 3 weeks in a row. You can see that you still have an uptrend with higher lows and higher highs is marked off by this brown line, the swing line, which is in my charting course if you decide you want to take that under the word education on our website. If you take a look at the chart here, when you look at moving averages, again, still well over that average. So the bias is up, the trend is up, support all the way back here in this 2155 level. And for those that were buying over the Bollinger Band, if you drop back 3 weeks ago now, everybody's underwater if they're still holding that gold. And the only thing I can tell you is you either believe in the algorithm or you don't. When this happens and you get this vertical rise, I don't know how to catch it. I'm the first guy that's going to tell you. Inevitably, it starts with a very narrow band in the market, like winding in a pipe, and then it goes. This was the place to catch the move. If you came out against here, there was nowhere left to get it because you had to buy over the Bollinger Band the whole time. This will give the setup if you're looking to be a buyer again, because the longer term chart is still bullish on this break. So I patiently wait the turn. Have we lost the bullish reading? Yes. You got a 78.6. You're no longer embedded. One of two things happens with that. Either you go up to negate this by getting back over 24.29, or price and the 18-week average try to make a run at each other. We'll see which one of the two it does. As for the gold-silver ratio, it's still in the color silver because the market's just come back up, whereas the silver market, which got down to almost about 83 ounces to get an ounce of gold, has now come back to 87. So it's right against here the 18-week average of closes. This is a do-or-die time for the silver versus the gold. And in the silver, it's the same thing. If you bought on this week, or this week, well, you're underwater on all three of those. So you didn't do well by buying over that band, and you hold back. Now, if you're good enough that you know how to pick the top there, congratulations. I don't. But this is classic. The sideways action. This set up the base. This was the easier catch than the gold market. You never did keep the embedded reading going. You not even try. You're correcting. I look for the big support around the 2,500 level. That does not mean it has to get there. But if it gets there, I'm going to be very interested in this market on the longer term to be coming in. One of my favorites will be copper in time. But I'm going to repeat, buying over this Bollinger Band, you can generally do better than that. Let's see if the market pulls back. It is embedded. It's the one of the metals that is embedded. It's one of my good-looking plays. And in my spider ETFs, I'm looking very, very hard at this because it has a copper and it's got a better-looking chart than this. In the platinum market, as I said to you during the week, platinum suddenly became the strongest of the metals. And you could see higher lows, higher highs, right into the resistance. The 100-day average in gray is stopping the red along with the black of the Bollinger Band, but it's a friendly chart. Until the market gets back under 905.40, it's climbed into the resistance area, but it's the strongest of the metals, in my opinion. And in the dollar, well, you're breaking down. The question is, will you lose the embedded reading this week? That's going to be it. First, support, because you stayed over this market, is the 100-week average, but I'm looking for the 18-week to get very close to that number, and this is the do-or-die time. Is the dollar going to be still long-term bullish against the euro or not? It's setting that all up. Now, one of the most common trends that we see in markets has to do with this chart right here, this chart pattern, and it's called an outside day. You will see it on daily charts all the time. It's either the end of a trend signal often or a continuation signal. Now, there's ways that you find if it's false in that center, and they're easy because you're looking at the outer bands of the outside day. I walk you through this first in PowerPoints, 9 video chapters, see what I do, what I teach, how I point it out. I cover with it stocks, futures, and ETFs, and part of the course gives you access to my morning paid subscriber videos. Why? I want you to see them develop in real time, and you get to see how that works. In addition, you get the charting software that I use, this exact software. If you haven't used it before, we can throw this in, and now you're able to do what I do with all the studies the way that I'm doing them. How do you find out more? How do you get the course? It's simple. Go to irapstein.com under the word education, or move yourself right up here. You'll see an icon. Give it a click and away you go. I'm Ira. You have yourself a great weekend. I'll catch up with everybody on Monday. Take care.